You know what nobody's talking about right now? The fact that thousands of retirees are about to wake up one morning next month and discover their benefit checks have been reduced, or worse, stopped completely. And here's the kicker. Most of them have no idea it's coming. Now, I'm not here to scare you, but I am here to tell you the truth. Because somebody needs to. February 2026 is bringing changes to Social Security and federal benefits that could directly impact your monthly income, and if you're not prepared, you're going to feel it in your bank account real fast. We're talking about automatic cuts to supplemental benefits, new income verification requirements that could disqualify you from programs you've been counting on, and changes to Medicare premium calculations that might eat into your Social Security check before you ever see it. This isn't some political talking point. This is your money, your retirement, your security. And the worst part? The government isn't exactly putting up billboards to warn you. So right now, we're going to walk through exactly what's changing, who's affected, and most importantly, what you need to do this week to protect yourself. Look, I've been doing this for a long time, and I can tell you right now that one of the biggest mistakes people make in retirement is assuming that once they start getting their benefits, everything stays the same forever. They think Social Security is this set it and forget it kind of deal where the check just shows up every month like clockwork and nobody bothers them about it. But that's not how this works, folks. The government changes the rules all the time, and they don't always make it easy for you to keep up. In fact, they're banking on you not keeping up, because when you don't know what's happening, you can't fight back or prepare yourself properly. And that's exactly what's going on right now with these February changes. So, let me break this down for you in plain English because the government sure isn't going to do it. First off, we need to talk about what's actually changing and why it matters to your bottom line. The Social Security Administration has implemented new income verification protocols that go into effect next month, and these aren't just minor tweaks to the system. We're talking about a complete overhaul of how they monitor your earnings if you're receiving supplemental security income, also known as SSI. Now, if you're not familiar with SSI, it's different from regular Social Security retirement benefits. SSI is a needs-based program for people with limited income and resources, and it has strict eligibility requirements. The problem is that the SSA is now using automated systems to cross-reference your income data with the IRS, state agencies, and even financial institutions in real time. What does that mean for you? It means if there's any discrepancy between what you reported and what they're seeing in their computers, they can suspend your benefits immediately without warning. And here's where it gets really frustrating. These automated systems aren't perfect. In fact, they're far from it. I've already heard from people whose benefits got cut off because the computer flagged a one-time insurance payout as ongoing income, or because a family member deposited money into their account to help with groceries, and the system interpreted it as unreported earnings. The burden is on you to prove that the computer made a mistake, and while you're fighting to straighten it out, your benefits are frozen. You could be looking at weeks or even months without that income you depend on, all because some algorithm decided you don't qualify anymore. This is real money we're talking about, money that pays for your medication, your utilities, your food. You can't just wait around for the bureaucracy to fix itself. Now let's talk about Medicare premiums, because this is another area where people are going to get blindsided if they're not paying attention. Every year, Medicare adjusts the premiums for Part B and Part D based on something called the Income-Related Monthly Adjustment Amount, or IRMAA for short. Basically, if you made over a certain amount 2 years ago, you pay higher premiums now. The threshold amounts get adjusted periodically, and starting in February, the SSA is using 2024 tax returns to determine your 2026 premiums. Here's the problem. A lot of people had unusual income in 2024. Maybe you sold some property. Maybe you took a distribution from your retirement account for an emergency. Maybe you had a spouse pass away and you inherited their IRA and had to take required minimum distributions. Whatever the reason, if your income in 2024 was higher than your normal retirement income, you're about to see your Medicare premiums spike, and that increase comes right out of your Social Security check before you ever see it. I'm talking about premiums that could jump from the standard amount to several $100s more per month, and you don't get a choice about paying it. The government takes it automatically. So you might think you're getting a certain amount in Social Security, but when that check hits your bank account, it's going to be significantly less than you expected. And if you're living on a tight budget, which most retirees are, that difference could mean choosing between filling your prescriptions or buying groceries. This isn't hypothetical. This is happening to real people right now, and it's going to get worse in February when the new calculations kick in. Here's something else that's flying under the radar. There are changes coming to how the SSA handles overpayments, and this is a big deal. If the Social Security Administration determines that they paid you too much at some point, maybe years ago, they have the right to recoup that money, and they do it by reducing your future benefits until the debt is paid off. The problem is that their computers aren't always right about whether you were actually overpaid, and even when they are right, the overpayment was often their mistake, not yours. Maybe they didn't process a form correctly, maybe they had outdated information, but somehow it becomes your problem to fix. Starting next month, the SSA is ramping up their overpayment recovery efforts using these same automated systems I mentioned earlier. They're going through old cases with a fine-tooth comb, and if they think you owe them money, they're going to start taking it out of your checks. You'll get a notice in the mail, and 30 days later, your benefit amount drops. Just like that. Now, you do have rights in this situation. You can appeal. You can request a waiver if the overpayment wasn't your fault and paying it back would cause financial hardship, and you can negotiate a payment plan. But here's the catch. You have to act fast. If you don't respond to that notice within the deadline, your chance to fight it is gone, and the withholding starts automatically. And let me tell you, dealing with Social Security appeals is not a quick process. You're looking at months of phone calls, paperwork, and waiting, and in the meantime, your income is reduced. This is why you need to be checking your mail every single day and responding immediately to anything from the SSA. Don't assume it's junk mail. Don't put it in a pile to deal with later. Open it, read it, and take action. Let me tell you something else that's going to affect a lot of people, and that's the changes to survivor benefits and how they interact with your own retirement benefits. If you're receiving survivor benefits because your spouse passed away, you need to understand that the rules around switching between survivor benefits and your own retirement benefits are getting more complex. The SSA is cracking down on what they call improper benefit elections, where people are maximizing their benefits by switching strategically between their own record and their deceased spouse's record. Now, there's nothing illegal about this. The law allows you to choose which benefit to take and when, but the SSA has decided that some people are doing it wrong, and they're going back and reviewing cases. If they determine you should have been receiving a different amount, guess what? Overpayment. And we're back to the same problem where they start reducing your checks to get their money back. This is particularly hitting widows and widowers hard, because many of them relied on advice they got from SSA representatives years ago about when to claim which benefit, and now the agency is saying that advice was wrong. It doesn't matter that you were just following what you were told by their own employees. It doesn't matter that you made financial decisions based on that information. If the computer says you owe money, and they're coming to collect. This is fundamentally unfair, but it's happening, and you need to be prepared for it. Let's talk about working while receiving benefits, because this is another area where the February changes are going to create problems. If you're under full retirement age and you're still working while collecting Social Security, there's an earnings limit. For 2026, if you earn more than a certain amount, your benefits get reduced by $1 for every $2 you earn above that threshold. The problem is that the SSA's new automated monitoring system is tracking your earnings in real time through employer wage reports, and they're not waiting until the end of the year to make adjustments anymore. If you go over the limit in February, your March check could be reduced. If you have a good month in March, your April check gets hit. This creates a situation where your Social Security income is unpredictable and fluctuating, which makes it almost impossible to budget. And here's what really gets me fired up about this. The earnings limit hasn't kept pace with inflation or the cost of living. We're in 2026, and the amount you're allowed to earn before they start penalizing you is still relatively low compared to what it actually costs to live. So you've got seniors who need to work, not because they want to, but because Social Security alone isn't enough to cover their bills, and the system punishes them for it. They're trying to be responsible, trying to support themselves, and the government is making it harder. It's backwards and it's wrong. Now, I want to talk about state-level benefits, because this is where things get really complicated. A lot of seniors receive help from state programs in addition to federal Social Security. This might be help with heating costs, property tax relief, prescription drug assistance, or supplemental food benefits. Many of these state programs use your Social Security income as part of their eligibility calculation. And when your Social Security amount changes, it can knock you out of eligibility for these other programs. So let's say the SSA reduces your benefits because of one of these issues we've been talking about. Your Social Security goes down, but that might not immediately increase your eligibility for state help because these programs often look at your income from the previous year or the previous quarter. You end up in this terrible situation where you're getting less money, but you don't qualify for additional assistance yet. You're stuck in a gap, and that gap can last for months. Different states have different rules, different deadlines, different application processes, and the agencies running these programs don't talk to each other very well. You might have to apply separately for each program, provide the same documentation multiple times, and wait for each one to process your information independently. It's a bureaucratic nightmare, and it falls hardest on the people who can least afford to navigate it. If you're dealing with health issues, if you don't have internet access, if you're not comfortable with computers and online forms, you're at a serious disadvantage, and the people running these systems know it. They're counting on a certain percentage of eligible people never actually claiming the benefits they're entitled to, because the process is just too difficult. Here's what you need to understand. The government is not on your side in this. I know that sounds harsh, but it's the truth. These agencies are under pressure to reduce costs and find efficiencies, and they're doing it by automating processes and tightening eligibility requirements. They're not thinking about the real human beings on the other end of these decisions. They're not considering what happens when an 80-year-old widow suddenly loses $300 a month because a computer flagged her account. They're looking at budget numbers and error rates and system efficiencies. You are a line item in a spreadsheet to them. And if cutting your benefits helps their numbers look better, they'll do it without losing a minute of sleep. So what do you do about all this? How do you protect yourself when the rules keep changing and the systems are designed to work against you? First, you need to get organized. Pull together every piece of documentation related to your Social Security and Medicare. I'm talking about your award letters, your tax returns, your bank statements, records of any other income you receive, documentation of your work history, proof of your age and citizenship, everything. Keep it all in one place where you can access it quickly. When the SSA sends you a notice questioning something, you need to be able to respond immediately with proof of whatever they're asking about. Second, you need to monitor your accounts constantly. Check your Social Security statement online every month. Look at what they say your earnings history is, what they say your benefit amount should be, what they're taking out for Medicare premiums. If something looks wrong, don't wait to address it. Call them immediately and follow up in writing. Create a paper trail. Keep records of every phone call, every conversation, every piece of mail. Write down the date, the time, the name of the person you spoke with, and what they told you. This documentation becomes crucial if you have to appeal a decision later. Third, understand that you have rights, but you have to exercise them. The SSA has to follow due process before they can reduce or terminate your benefits. That means they have to notify you, give you a chance to respond, and consider your evidence before making a final decision. But those rights don't mean anything if you don't use them. If you get a notice and you ignore it, you've waived your right to challenge their decision. So pay attention to your mail, read everything carefully, and respond before the deadlines. If you don't understand something, ask for help. Call them. Go to your local Social Security office. Reach out to a senior advocacy organization in your area. Don't just assume everything will work itself out, because it won't. And finally, prepare yourself financially for the possibility that your benefits might be reduced or delayed. I know that's easier said than done when you're already living on a fixed income, but it's important. If you have any savings at all, protect them. Don't touch that emergency fund unless it's a true emergency. If you can cut any expenses, even small ones, do it now while you still have your full benefit amount coming in. Build up whatever cushion you can. because if your benefits get cut next month and you have to fight to get them restored, you're going to need something to fall back on.